Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you joined us for our next live presentation from Silex Systems, a technology company that uses lasers to work towards uranium enrichment. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Michael Goldsworthy, CEO of Silex Systems, which trades on the OTCQX Best Market under the symbols SILXY and SILXF, and on the ASX under the symbol SLX. Welcome, Michael.
Thank you very much, Bob, and I'd like to thank OTC Markets for the opportunity to present today. So I'm going to tell everyone about our technology, our unique laser enrichment technology, which was invented in Australia, in Sydney, Australia, some 20 years ago, and has been under development principally for uranium enrichment, but also secondarily for silicon enrichment, for the application to silicon quantum computing. And more recently, we started a project to enrich some medical radioisotopes for things like cancer treatments. So our strategy is focused on extracting maximum value from our core Silex laser enrichment technology. We have very strong ESG credentials, obviously nuclear power for clean energy and its potential to support net zero 2050 targets with carbon-free electricity production. And secondly, the silicon enrichment project for silicon quantum computing. Silicon quantum computing is coming down the pipeline. It's expected to be much more powerful, maybe 1,000 times more powerful than the best of today's computers. And that will give us the power to solve many global social and environmental problems. And then thirdly, the advanced nuclear medicine isotopes. Clearly here, the potential to support frontline new generation cancer treatments and therapies. A little bit more information on that slide that I'll leave for your leisure to dive into, but let's move now to focus on uranium enrichment. Silex uranium technology licensee, exclusive licensee, Global Laser Enrichment, GLE, is today actively progressing this technology with us towards commercialisation. We have 2 sites actively commercialising the technology in Sydney, Australia, and in Wilmington, North Carolina. GLE is a joint venture owned 51% by Silex and 49% by Cameco Corporation. Cameco is one of the world's leading uranium producers and nuclear fuel suppliers based in Canada. GLE has the unique potential to address what we call the triple opportunity that is emerging in the global nuclear fuel supply chain, with potential production of nuclear fuel in the form of, firstly, natural uranium hexafluoride. That is the natural uranium traditionally mined by miners, which has then been converted into the fluoride from oxide. So that's producing natural uranium. The second opportunity is then enriching that natural uranium up to what we call reactor grade or low enriched uranium, LEU. And then the third opportunity is to enrich further to what we call high assay low enriched uranium, or HALEU. That is a fuel that is required for the next generation small modular reactors, advanced reactors, that are coming into the market over the next 5 to 10 years. And that is an important fuel for nuclear power next generation. So the triple opportunity we will focus on more in a short time. But first, let's look at the threats to the current nuclear fuel supply chain, principally caused by overexposure, overdependence on Russian-sourced nuclear fuel. Western suppliers have curtailed and underinvested investment in resources and production capability. The nuclear fuel supply chain, shown in the upper half of this chart, consists of 4 steps, 3 highlighted in green where GLE can have an influence. The first step is the uranium production through traditionally mining of uranium in the form of uranium oxide or yellow cake. The uranium is then taken to a conversion facility where it is converted from oxide to fluoride. And then the uranium hexafluoride is taken to an enrichment plant where it is upgraded to LEU, low enriched uranium, or reactor grade uranium for the fabrication of fuel elements, the 4th step. And finally, those fuel elements go into a nuclear power reactor to generate the heat and the steam and the electricity. So if we look at the current situation in the nuclear fuel supply chain, the conversion sector is quite vulnerable. There's only 3 Western suppliers if we exclude Russia. That is Cameco, Orano, the French, and Convidine here in the US. In the enrichment sector, it's even more precarious. If we take Russia out of the enrichment industry, there are only 2 Western suppliers. Urenco, which is a European-based organisation. They also do have a plant here in the US. And Orano, the French. So enrichment is quite vulnerable to the effects of sanctions on Russian supply of enriched nuclear fuel. Finally, the HALEU fuel for next generation small modular reactors, there are no Western-based suppliers, and the SMR developers were relying on Russian HALEU fuel for their first few years of operation. So the situation in the current global nuclear fuel supply chain is a little precarious, to say the least. And if we look at that in some more detail, the Russian share of global capacity in those first three steps of the supply chain. Uranium production, Russia accounts for about 14% of production. Conversion, Russia accounts for about 27% of global capacity. And enrichment, by way of its massive resources of gas centrifuge plants, Russia accounts for about 45% of global enrichment capacity. The way that plays into the Western markets, the European Union today relies on enriched Russian fuel for about 31% of its requirements annually. And the US relies on Russia for about 20% of its enriched nuclear fuel requirements. So quite an impact that has been precipitated by Russia's incursion into the Western fuel markets and now risking those supply chains by virtue of possible sanctions in the wake of its invasion of Ukraine. So the Russian imports into the US are of great concern to the industry in the US. Currently, the US does not have very much uranium production. Its conversion requirements are fully imported at the moment because the single American plant is not up and running. And in terms of enrichment, 70% of US enrichment comes from offshore. So how do we address this? In the meantime, prices have climbed quite rapidly in the last 2 or 3 years. Uranium prices have nearly doubled. Conversion prices have doubled over that period, and enrichment prices have more than tripled in the wake of the Russian invasion of Ukraine. So the markets are really feeling quite vulnerable at this point, and that's reflected in rapid rises in uranium conversion and enrichment pricing. That's caused our joint venture partners, Cameco and Silex, to announce an acceleration in the commercialisation of our SILXY uranium enrichment technology that was announced in February this year. And that will see a doubling in our project expenditures from this financial year. We were planning to finish the demonstration of commercial scale pilot facility at the end of 2025. That has now been brought forward to the middle of next year. all things going well. So hopefully by the middle of next year, the technology will be demonstrated at commercial scale. If that falls into place, then we preserve the option of commencing commercial operations at the first commercial plant, which is planned for Paducah, Kentucky, and which we call the Paducah Laser Enrichment Facility, the PLEF. We hope to commence commercial operations as early as 2027, 2028, which is about 3 years earlier than originally planned. So we've announced an acceleration in our activities to help fill the gap that will be caused by sanctions on Russian imports at some point in time. There's significant support emerging from US government and industry. The US government passed the Inflation Reduction Act in August 2022. That included $700 million of support for the HALEU availability program. That's to make the high-grade fuel for next-generation small modular reactors. And just recently, a couple of weeks ago, the Department of Energy released the draft request for proposals for the HALEU availability program, and GLE is now busily drafting its response to that RFP. There are other bills before Congress today, 2 or 3 that we know of. The one we're focusing on is the Nuclear Fuel Security Act. That has passed committee stage. It's now before Congress being debated. That will provide additional funding support for the production of both LEU and HALEU. That's reactor grade and higher grade SMR fuel. So we eagerly anticipate the passage of that legislation as we work through the remainder of this year. There's other bills that may result in the banning of Russian imports. That's expected to pass through Congress in the coming months as well. In the meantime, we've got strong support from the US nuclear industry. We've signed through GLE 3 letters of intent with the 3 largest nuclear utilities in the US, Constellation Energy, Duke Energy and Dominion Energy. These letters of intent will be transformed into active support in some form or other, but these utilities are very, very keen to support GLE's entry into the market over the coming few years. Our timeline, as I've just mentioned, we've accelerated from the top timeline, which saw commercial operations in Paducah around the end of the decade, hopefully bringing that forward to the 2027-2028 time frame. To get there, we need to finish the commercial pilot demonstration, now planned for next year, and then there's some feasibility assessments and a licensing step that will take possibly around 30 months. That's the nuclear regulatory license for the Paducah site. So lots of activities over the next few years as GLE moves into the market and positions itself to provide US domestic nuclear fuel supply capacity. We've analysed the triple opportunity at some depth now. We've just pause here to focus on each of these opportunities. The first opportunity, as I mentioned, is to produce natural grade uranium. Now, this is going to be done through an agreement between GLE and the US Department of Energy that was signed in 2016. That involves the purchasing of over 200,000 metric tonnes of legacy tails material that's come out of their first generation diffusion plant, which is located in Paducah. And so that agreement effectively will see GLE convert those legacy tails, about a quarter of them, back to natural grade uranium hexafluoride. That's the first opportunity. The second opportunity would involve more capacity of our Silex enrichment technology to take the natural grade material up to low enriched uranium, that's reactor grade. And that second step is potentially the most important for us. The third step is to produce the high assay LEU for the advanced reactors coming down the pipeline. The plant that we're planning for Paducah, Kentucky sits adjacent to the legacy Department of Energy site. There was a first generation gas diffusion plant that operated there for 30, 40, 50 years, I think. Overall, there's the tails that came out of that plant are located in the yards around those buildings. Tens of thousands of cylinders of this depleted tails material, of which over 200,000 tonnes will hopefully go through the plant shown in blue here in the center of this picture. That's the natural grade uranium production plant for Paducah, and then that material would then go into the next hall in this grey facility shown on the left, and that's where we would produce the low enriched uranium. And then some of that would go through a third plant located here in the green building to produce the higher grade LEU for advanced small modular reactors. There's quite a bit of capacity allowed for with the production of low enriched uranium. That's going to become the pinch point in the current nuclear fuel supply chain as Russian imports are sanctioned or excluded. So there's quite a bit of extra capacity allowed for in this plant for the production of LEU. So how does that look economically? We've analysed just the first step, that's producing natural grade uranium from the tails. All-in cost, I won't go into all the detail, but all-in cost of less than $30 a pound. That's CapEx, OpEx, sustaining CapEx, payments to the DOE for the feed material, and payments of the royalty revenues from GLE back to Silex for the licensing of the technology. This first step would equate to production of 5 million pounds equivalent from a mining operation, equivalent to 5 million pounds a year for 30 years. So it's quite a substantial project, even without adding the second and third opportunity. And on top of that, we get the value of the converted uranium, which today trades at $30 a kilogram. So 2 million kilograms will come out of that plant in the value of the conversion every year for 30 years. And today's price of $60 a pound for uranium would see around $300 million of revenue from the 5 million pounds production year in, year out for 30 years. So quite a unique opportunity. We have a situation also with our partner Cameco, negotiated a restructure of GLE in 2019 and included an option for Cameco to go from 49 to 75% with the acquisition of 26% equity at fair market value. That's in play. We are in discussions with Cameco on that one, but that's something that will take some time. But in any case, whether we're 51% or 25%, our equity stake in GLE is quite valuable to our shareholders. On top of that, we have the SILXY license for the technology. That's been in place since 2006. It's perpetual because the technology has been classified by the Australian and United States governments. So there's no sunset on the IP. So that revenue royalty will be perpetual as long as GLE is using the Silex laser enrichment technology for those three opportunities, any of them. They'll be paying a revenue royalty. And that would be a minimum of 7% of their enrichment SWU revenues up to 12%. There's a sliding scale based on the CapEx per unit output that we would anticipate would improve the royalty as we build more capacity and the cost per unit output decreases over time. But just as an example, the royalty is quite valuable to us. If we have an 8 million SWU plant operating at this site one day that I just showed you, in this photo, there's 12, 14, 16 million units of enrichment allowed for in that picture. But if we just take the case where we're producing around 8 million units of enrichment at the lowest revenue rate at today's price, would see revenue royalties flowing back to Silex of around $80 million US every year. So that's an important part of our economic value going forward. Just a couple of minutes on silicon and medical isotopes. Silicon in silicon quantum computing is coming. There's some massive efforts around the world to realise quantum computing in one form or another. Silicon's probably the leading technology, given the world has perfected silicon nanofabrication over the last 50 years with our conventional chips. The only problem is you can't use natural silicon. You have to use enriched silicon. This technology works on the atomic scale, and one of the isotopes of silicon does not work to that end. So Our job is to enrich silicon to very high purities and exclude that silicon-29 isotope. Put simply, we have demonstrated the ability to achieve those very high enrichment levels, 99.995%. So that's the material that our potential customers are eagerly awaiting. The only place they could get quantities of this material, enriched silicon, previously was from Russia. So same issue. Critical material dominated by Russian supply, now disrupted by sanctions on the Russian materials. So our job now is to go commercial. Once we've demonstrated the technology at pilot scale, we're now moving into the commercial production phase over the next year or two. And we've lined up some potential customers, some who want solid, some who want gaseous form of this special material that we call zero spin silicon. That's quite valuable. It trades around US $500 a gram or $500,000 a kilogram. The market's small today, probably only around 20 kilos, but this market's expected to grow rapidly over the next 5 to 10 years to hundreds of kilograms and potentially tons if and when silicon quantum computing becomes mainstream in terms of quantum technology. So that's a very exciting project for us, and we're moving forward into the commercial phase as we speak. A much newer project was launched in February to look at some potential markets in medical isotopes. The one we're focusing on now is for enriched ytterbium. Enriched ytterbium is a key ingredient to make what we call a radioisotope, lutetium-177, which has been achieving fantastic results in clinical trials for several cancers, advanced cancers. It's already been approved in the US and Europe for advanced prostate cancer therapy with resounding results. The only problem is the raw material, the ytterbium, enriched ytterbium. Again, the only source available was from Russia. Same old problem. So we are looking at producing alternative supply of ytterbium-176 for this very exciting cancer treatment therapy. And we're looking now at a project to demonstrate production at laboratory scale this year, then moving into prototype scale next year, and then pilot and commercial scale the following year if all goes well. So the one technology, laser enrichment, has quite a few different potential applications, and we're very excited at our prospects in each of these projects. So to summarise, we have GLE's path to market underpinned by the Paducah Laser Enrichment Project for cost-effective production of natural uranium from the depleted tails material. That will produce quite a sizable amount of natural uranium and also contribute to the conversion market. Acceleration of our activities from this year to complete the pilot demonstration project, hopefully by the middle of next year, and thereby preserving the option to start commercial operations in Paducah in the 2027-2028 timeframe. Triple opportunity that I've outlined involving using the one technology, the Silex laser enrichment technology, to produce three different grades of fuel, or several different grades of fuel: natural grade uranium, low enriched uranium, a new higher grade of LEU called LEU+, and then ultimately the high assay LEU nuclear fuels, with the potential multi-purpose nuclear production facility at Paducah helping to alleviate US nuclear industry dependence on imported Russian fuel. Long-term fundamentals for global growth in nuclear power are strengthening month by month. Climate change mitigation measures and the emerging global energy supply disruptions are energising Western nuclear fuel markets, and GLE is very well positioned to help contribute to stabilising the Western nuclear fuel supply chain and providing secure energy supplies to the Western markets. Silicon enrichment project successfully demonstrated now at pilot scale and transitioning towards initial commercial production for that very exciting silicon quantum computing application. And finally, our early steps towards looking at medical radioisotopes, initially for enrichment of ytterbium in pursuit of the new treatment for advanced cancers. So at this point in time, our balance sheet is quite strong. We have nearly $150 million Australian in the bank and zero debt. So hopefully moving forward into our commercial phase over the next few years. And that's where we are today. So thank you very much for listening. I'll now take some questions. Okay, so I have a question here. What is your total addressable market for your technology? So the market for uranium is around $9 billion annually today. This is all US dollars. Conversion is getting up towards $2 billion annually, and enrichment, the global market is in the order of about $6.5 billion. So there's nearly $17-18 billion of annual business in the nuclear fuel supply chain. The markets for silicon and medical are smaller, but they are emerging. They're nascent, and we hope that they grow quite considerably over the next few years. The next question, can you discuss your capital position, ability to accelerate your timeline, and the potential value of assistance from US government? So this question has in part been covered. I did mention at the end, our balance sheet is strong, nearly $150 million Australian in the bank with zero debt. We're well funded to carry our technology applications through to commercial phase over the next 2 to 3 years. And in terms of potential value of US government assistance, this would be most appreciated. There is the HALEU availability program request for proposals now in train, so we're actively pursuing that avenue of government support. There is also the US Department of Energy Loan Program Office. We've had several meetings with the Loan Program Office in Washington. That's a facility, a debt facility with very attractive interest rates specifically for new technologies to help support the nuclear fuel supply chain, and laser enrichment is actually called out in the solicitation documents for the loan program facility. So we'll be talking further with the Department of Energy Loan Program Office over the coming years as we move from pilot demonstration to the construction of the first commercial plant. We will consider the loan program as a viable source of debt finance at, and now today especially, attractive interest rates. Thanks for that question. The next question, what is the ownership makeup of Silex Insider, institutional and strategic? So Silex Insider is around 20-odd%. There's over 20% institutional holding. That's growing now. We did a capital raise in February, and there's a lot more interest now from institutional investors going forward. Still a high percentage of retail investors there, but the institutional investment level is increasing as we move forward. So the next question, can you also speak to the total addressable market for your quantum computing and medical isotopes? So that's difficult at this point. All we know is that The silicon market is going to grow. It's still in the R&D phase for silicon quantum computing. We know the market's in the ballpark of 20 kilograms, so that's about $10 million revenue a year. But if that's expected to grow rapidly over the coming 5 to 10 years to hundreds of kilograms. So 100 kilograms at that price is $50 million of revenue. That's about all I can say on that particular market. It's still nascent, so we'll have to see how that evolves. The next question, is there access to additional DOE feedstock? There is potentially, but that's something that is for further discussion. And on that note, I've hit the 30 minutes, so thank you very much, everyone, for listening.